It was a disappointing day for the Bears. Sigh of relief for the Bulls. S&P 500 finished down 0.5%. You had the Nasdaq down 0.3%, and you had the Russell 2000 down 0.2%. But it was a huge recovery off of lows, and also basically saved a lot of charts from absolute going into breakdown mode. So it was a big recovery for the market, even though it finished low off of the lows, or finished lower. It finished off of the lows, and it definitely improved the morale of the bulls some going forward. So CPI report that came out today, really ugly. I mean, it was one of those things where you said, okay, I see the CPI report. It's coming in at 9.1 versus the 8.8 of expected. And you would think, man, this market is going way down today. And initially it did. And then around like that 10 o'clock time period, it's like you started seeing those buyers creep in. And you even saw it right at the open where you're like, why are we not pushing lower here? I mean, that was a hideous number, and it just kind of stabilized right there at the open and worked its way higher throughout the morning, and then it just flatlined the rest of the day. So it wasn't a really like exciting day after that like 11 a.m. turn, but nonetheless, I think the bulls are breathing a huge sigh of relief. It doesn't mean that they're necessarily out of the woods yet, because you've seen with a lot of FOMC statements, you've seen with the FOMC minutes, you've seen with a number of reports where the market will rally on the report on the day that it's released, and then just completely blow it the next couple of days. So wouldn't surprise me if we sell off tomorrow, and honestly, it wouldn't surprise me if we rally tomorrow. And that's the kind of like the crux that we're in right now, where you really don't have a clear signal of where we're going from here. But what you do have is you can set parameters to where you can say, okay, if it crosses this level, that's a reason to get more bullish. If it crosses this other level here down below, then there is a reason to get more bearish. So I came into the day with QID. I was hoping to get into SDS. Those are both 2-to-1 inverse ETFs of the Nasdaq 100 and S&P 500 respectively. So I was looking to make some moves. In fact, I made my first trade yesterday. First trade of the month. I almost had to read the manual of how to freaking place a trade on Thinkorswim platform. Not really, but it was frustrating though, because I have been waiting for so long just to get some kind of clarity. There was days where we were getting to like 1 cent of my trigger price, and I couldn't even get in. It wouldn't even hit it. It was just, it could be really frustrating at times. But the market oftentimes will reward the patience, being patient as a trader. And that's what I feel like it did for me along the way. It kept me from getting into a lot of bad trades. If you remember, like the last time I was talking, I tried to get into QQQ last week on that breakout of the bullish wedge pattern. And when I did, or when I tried to, basically I couldn't get into it. It just ran without me. I didn't want to chase it, and good thing, because guess what? The market pulled back from how far it ran. It ran up about 2% from where I wanted to get in. If I had chased, I'd be down about 2 or 3% on that trade. And so not chasing has really paid dividends for me, particularly this year. In a bull market, you can get forgiven of a lot of bad entry prices. In a bear market, my gosh, chasing can really burn you. But so essentially my QID trade, I came into it today with about 1% in profits. Looked like I was going to make 5 or 6% today. The way it was looking in the pre-market, I was excited, just like any trader. Man, hey, look, CPI did exactly what I was thinking it was going to do. It was going to come in hot. Markets would retrace. But what I hope for and what I expect doesn't mean that the market has to align with that thinking. And so what I have to do is I have to adjust, because just because I hope or I wish for something doesn't mean the market is going to align itself with that thinking, because it doesn't even know that I think that, right? It doesn't know who I am. It's going to do what it wants, regardless if I'm in the market or not in the market. And so I took a third off at about 3.3% this morning when I started seeing that market start to creep up a little bit more than I would have liked. And then when we got closer to that break-even point, I closed out the last 2/3 for about a 0.9% on that final 2/3. So on the overall trade, I made like 1.7%. It wasn't a ton. But I wasn't going to white knuckle it and lose all my profits either. I had a plan. I stuck to the plan. I managed the risk accordingly. And I have no regrets about that. Would I have liked more than 1.7% on QID? Absolutely. But the big thing about trading stocks is that what we want is not what we often get, but it doesn't mean that it wasn't a successful trade. We get these things in our heads like, I think I'm going to make 10% or 15% on this trade, and you come away with 1.7%. You're like, oh, that's this. Got that initial CPI reading. But I can't let that stand in the way of what the market's ultimately willing to do, and I have to react accordingly. So that was the big deal. Aaron Sunday is asking, did he miss today's bourbon? No. Good segue. I'm drinking Four Roses, man. I'm finishing off this bottle. See that there, man? It's a pretty good bottle, man. I like it, but no, I'm not gonna throw it. But no, it's a great value buy. You can get it like Sam's for like 25, 26 bucks. I don't know. Maybe it's up to 28 with inflation now, but it's really good bourbon. I like it a lot, especially after a little bit of frustrations today. I'm happy to be drinking this. Oh, by the way, too, there's a lot of thunderstorms all around. I live in Florida, so we get thunderstorms every afternoon, especially in the July, August timeframe. So if I lose power, hopefully I don't. It could happen. Forgive me for that. But yeah, Four Roses, small batch. So it's pretty good. I'll have to get another refill because it's so perfectly priced. Okay, so talking about the CPI report, and again, put your stocks that you want me to cover down in the comments section. I do see every one of them, and I will be going over your charts and your questions. But first, what I'm going to do, I'm going to go over the SPY. I'm going to go over the CPI report. Going to go over some of like the expectations going forward. Going to go over the Qs. Going to go over the VIX, and then I'm going to jump into your charts and see where that takes us. So let's talk about the CPI report first, okay? So 9.1 versus 8.8 expected, okay? That's definitely not good. We want to see that start to come down just from a consumer standpoint at least. But now you're starting to see talks about 100 basis point rate hike. I mean, I think the Bank of Canada already just did that. So you're starting to see that. You're starting to see more talks that I think you're going to see those talks increase to a much more fever pitch as we get close to the next FOMC statement, and I think it's going to be up in the air between 75 and 100. And I think they should do probably 100. They got to get ahead of this stuff, even if it's too much. They got to try and do something here. They got to try to squelch the demand. So you got that happening. You also have the potential for at least 75 basis point rate hikes at the next two meetings. That wasn't something that people were contemplating until today. So that's another big thing. So there's a lot of things that, like a change of expectations, a change in the roadmap that happened today with that CPI report. And you thought, okay, with all that happening, man, we should have been a lot lower, but we weren't. The dip buyers came back in. I don't think that this is ultimately the bottom of the market, but when you have low volume and you have a very low volatility market, it's much easier for the bulls to make gains to the upside than when you're getting into the like much higher volume markets and the much more emotional markets with much more volatility. That's where you start seeing much bigger price swings. Right now, the VIX just keeps drifting lower. And that was one of my signs early on today is when I saw the VIX starting to retrace some, I'm thinking to myself, when I saw it retrace, I started thinking to myself, that's not the best of signs that this market's going to go lower. The fact that we're only up like 1.5%, probably not what you're really wanting to see if you're a bear. So again, like I said, disappointing day for the bears, but sigh of relief for the bulls. We'll see what happens tomorrow. But let's go ahead and look at the SPY here. And make sure, too, that you're liking and subscribing to the channel down below if you're watching on YouTube. That way you can post questions. SPY. Let's go ahead and dig right into it. So you have this a bear flag pattern that it's formed. But what makes it interesting is that we essentially just like closed right on this bear flag pattern. And the bear flag has been very persistent in this market. We've seen plenty of them, right? You draw that a little bit better there. So we get these bear flags and then we confirm pretty hard to the downside. So these are the last two that we've seen. We got a big gap lower right here, and then we got the gap lower today. So it almost looked like a repeat of what we saw back in June 10th specifically. But instead of continuing to push lower, making that QID trade really nice or SDS trade really nice, we rallied back. So that stunk. I mean, at least from a personal standpoint, it stunk. But we're sitting right here at resistance on the SPY. So is it going to get right back in there or not? Now, there is resistance overhead, and I've been highlighting this a few times in previous live streams. We've got this one right here, and I'll change the color of it to yellow just so it stands out a little bit more versus from the bull flag. There we go. So you got that declining trend line right there. You did have a declining trend line underneath as well, but that one kind of got broken with this break below here. So I'm not really weighing that one as heavily as I was before. Actually, it was more like this trend line right there. That was like a bullish wedge that was forming, but then we broke below it. So I'm not really paying much attention to that trend line anymore. So essentially for the bulls, and I don't think SPY is as bullish of a chart right now as the Qs necessarily. So, but for the bulls to really gain a hold of this market, and remember, it's down 4 straight days going back to last Friday, it's got to get back above this declining trend line. I think that's the first one. And then you got this layer of resistance right there as well that is giving it some fits too. So get above this resistance level and get above this declining resistance level. And then you have a little bit of a more bullish tilt to the S&P 500. So there you have it with the SPY. If you get a break to the downside tomorrow of this bear flag, you get, okay, we closed right on it today. But if you actually get a reversal tomorrow, what does that look like? What do we want to start watching for? Well, I would probably look to see if whether or not we come back down and test this lower declining support level. It's not well developed at this point. You got essentially like 2 tests of it. Does it, or 3 tests? So does it test it right down here and get down into the 349s? That would be a pretty big move, but that would be the logical destination for the next leg lower. And I'm getting you guys, I see EOG with SoFi, ETH, CRSP, HNST, and we got Ricardo wanting to know about Baba and has the trend changed in that one. But first, let's get to QQQ. And so I'm going to zoom in a little bit on this one. And you see this here? This goes back to the June lows, June 16th specifically. And you got a series of higher lows, but you don't have really a series of higher highs. I mean, it's pretty much break even with the previous high point. So you got this flat level right here. Draw that there. And then you got this rising trend line right here. And what did it do today? Dadgummit, if it didn't hit that level, try to break down at the open, couldn't, found buyers practically immediately and started rallying up. So now we're like just remaining stuck in this freaking range that really drives me nuts, honestly, because I love to have direction. I would love to have direction to the upside or to the downside. Now, one of the things that does kind of make this pretty interesting here is we have been talking about in the last one, and I want to follow up on it. That's why I'm bringing it up. This bearish wedge. So this bearish wedge, and I'll change it to yellow. This bearish wedge broke out last week, and we got very little continuation on to the upside, mainly because you have this stubborn little middle channel band, and it's essentially stuck in this channel, right? You have this channel band, and price has rejected it the last couple of times it's been tested. So once here, a couple of times here, and then you have another time right there, and then the price retraces. So it needs to get above that for sure if it's going to have any kind of legs to it going forward. And then it needs to get above this short-term resistance right here as well. So I'm going to zoom as much as I can in on it. So this is your declining middle resistance band here. And then you have price level resistance at around 296. Get above these 2 levels here, and you got a much more bullish argument to make for this market. And until that happens, it's very difficult to make that case because, yes, it can keep bouncing off of it. But if it can't break above this, there's very limited reward to be made off of this market to the upside. So to the downside tomorrow, where would I get bearish at? If it breaks below the lows of today, that would be essentially it, because then it's breaking this trend line. And then from there, what it needs to do is it needs to break this resistance level right here. This is going to be the lows going back to, I think it's June 30th. Break those lows, and the bears suddenly have control again of the market. Right now, it's a tug of war. Essentially, since mid-June, we have not gone anywhere. If you go back to like June 10th, right? Price is pretty much just a shade lower than where it was at on June 10th. Hasn't gone anywhere. And that's this tug of war. That's why you haven't seen me trading as much. That's why I'm complaining about it, because I'm not getting a clear direction. If I don't have a clear direction, as much as I like to trade, I'm not going to trade. You got to wait. You got to wait for that confirmation. And so right now, if we can break below this trend line, that would be huge. It would definitely be further validated by a break below the June 30th lows to the upside. And I think Qs is probably the play that you want to be following the most right now. To the upside, it needs to break above this price level resistance, this high and then this high right here. That's what's creating the price level resistance. And in doing so, it will also break above this middle channel band and set the stage for a rally up to this, the major declining trend line that's hovering just above 330. So there is some potential to the upside. It just has some work to do. Same thing to the downside. And we just have to wait for the right opportunity right now. The Qs. Now I'm going to get to the VIX, and then after the VIX, I'm going to get to your questions. So here I am waiting for the VIX to pop up. Not sure if it's, I'm not even sure if my screen is even working at this point. There we go. Let's see. There we go. All right. Every once in a while it does that to me. I swear it drives me nuts when it does. It only does it when I'm on air too. Maybe the graphics card's getting confused or something. So on the VIX, this resistance level is the one that I keep saying, pay attention to when the VIX gets up to this level, because there's a lot of reversals that keeps happening right around here. So right now it sits at about 33. When that level hits 32, 33 area, that's where you got to be cognizant of the fact that it may see some significant selling going for, or selling on the VIX, but rallying in the overall market. So right now, we haven't been able to make a lower low on it. So that's one thing that the bears in the overall market have going forward is that it's still making higher lows, but it's not able to break through that. I think when you get that capitulation in the market, it's one of the things that's going to be the telltale sign behind it is going to be a huge break through this resistance level. I don't think there's any capitulation yet. I don't think we've hit a bottom until we can break through that resistance and really flush out the buyers. So anyways, that is all I wanted to talk to you guys about. So now we're going to get into y'all's charts here and start seeing what you guys have to look at. Ryan, Fairchild, give me something here, man. Let's see what does Skyhar have to say here. Let's go F and LCID. We can do that, man. We'll do that right now. F. Let me go back to the scratch board here. So these, when you see some of these lines here, this is kind of like my what I'm working on throughout the day. I like to usually start off by just giving you guys a fresh slate and looking at it from that angle. But right off the bat is this declining trend line and forward that continues to persist. I don't think this thing goes anywhere until it breaks through this thing. It's got to break through it, but it is a bullish wedge that has been working since April. So that's a positive right there. That's a bullish wedge. So a bullish wedge is when price is falling, but I can never do this right in the camera, but it's falling at a tighter and tighter channel. So it's not like parallel like what you've seen in some of the other charts. It's much tighter. It's getting narrower and narrower, and as it gets more narrower, it increases the odds that there's going to be a break to the upside. So when you're seeing it drop like this, the lows aren't getting significantly lower, and as a result, it's creating the potential for an upside break. So right now, you're sitting just below this 20-day moving average. It's struggling a little bit with that over the past month, but if it gets above that and it can get back above this declining resistance level, let's say like 1187, it becomes a much more appealing trade setup. I would also say too, you got what kind of looks like a double bottom right here. Check this out. So first bottom, second bottom, and then it confirms right around there, right? I would say so. I think that's about. So if we break out the bullish wedge, you got to make sure that it doesn't get bogged down at this resistance level. I don't think you have to necessarily wait to that level, but I think the bullish wedge is enough to give it a shot. But if it bogs down at 1228, I'm not going to like wait around to book profits. But I think it's definitely worth tracking going forward. So forward. And again, some of these charts, I'm not familiar with what their exact earnings date is. So you're going to want to double check, because my top rule is I don't hold stocks through earnings. So if some of these have earnings reports coming up, I don't necessarily know them offhand. So I'm just going off of the charts. But typically, I won't trade a stock if it's a week out from earnings. So LCID, man, this guy's heavy. We got Skyheart focusing heavy on the auto industry here, huh? You got some resistance there going. LCID has been one of the better ones in terms of forming a good base over the last couple of months. It's done a phenomenal job at that. You have Tesla that has done a similar kind of price action over the last couple of months where it just trades sideways. I can pull up Tesla, and I know somebody asked about it, so we will get to that here in a little bit. But Tesla has traded sideways in a very similar fashion that LCID has, though I think LCID might be a little bit longer. And but I think the same rules are going to apply on LCID. You got to wait for this breakout to unfold. Once that breakout unfolds, let's say about 2068, then it gets much more bullish. But remember, you're in a very difficult market right now, so there's been a lot of head fakes on breakouts. That's one of the reasons that I'm not trading a lot of individual stocks right now. I've been focused more on the ETFs just because we're in a difficult market. We're in a bear market, and especially at this time of the year, there's a potential for a lot of companies to start doing earnings warnings, where they don't wait till the earnings reports to come out. They're telling you out of nowhere, you'll wake up one day to it, or after the market closes, they're like, hey, we're not expecting quarter two to be good, and the market just kills the stock. It drops like 20%. We saw that with UPST last week. It doesn't look like much on this chart because it's dropped so much so far, but it went from like 34 down to 27, and it's yet to have a positive day since. So you can see where you get one of those early earnings warnings. I can hardly say that correctly. It's a tongue twister, but when you get one of those, it can be really nasty. So LCID, it's got a lot going for it. It's up like 6 out of the last 7 days. How many stocks can say that right now, especially with SPY being down 4 straight days? So LCID, nice consolidation. You can put stop loss below yesterday's lows, and then maybe like a entry price around 2068, and it sets up nicely. Let's see here. Aaron, CVBF. Did I type that right? Yeah. Man, that's a lot of... You go back to 2017 on this joker, right? Dang. Just trying to find the trend line on this thing. I don't know. I'm trying to find the... What I do when I'm doing these things, I'm trying to find the edge on the trade. I'm trying to look for where is there an edge at. And so I might have found one. You can make the case that there's a little bit of a breakout opportunity on CVBF. You got a lot of banks that are going to start reporting here in the coming days, so you want to be aware of that, okay? Once these banks, you got Bank of America, JP Morgan, Citigroup, Goldman Sachs, when those guys start reporting, they're going to impact all of the banks depending on how well their earnings are. So with CVBF, I think and there's multiple ways to draw this one, I think. Hold on a second here. Let me fix this up. I'm just kind of curious if this point right here needs to be included in the line. It's hard to say. I almost think that you have a ton of head fakes on this stock. When you draw it like this, there's a ton of head fakes. No closes except for just recently. What was that? Monday, it closed above it, and then it immediately sold off thereafter. I would say be careful of the head fakes. I mean, there's clearly some resistance around this, 2487 to 2490 range. If it can get back above it, there's the potential for it to run, especially, and I don't know when its earnings are, but if it has earnings, within the next week or two, probably worth staying away from. But if it doesn't, and you can muster the earnings calls of all the big bank stocks, there's potential for, and then maybe it's the big bank stocks having good earnings. I don't know if they will or not, but if they do, if they can break above that level, that could be that could give it the fuel to break out of this resistance level there. So that's it's pretty good too for any stock to be positive on the year. And that's what CVBF is. It's positive. I think kind of an interesting play. I mean, this is not a company that's just, it's been trading since 1984, 83. So, I was like a little tot at that age. But So it's not a fly-by-night stock. And it's trading at pretty much its all-time highs. Within the last week, it's been trading at all-time highs. That's nuts. Good find, man. I'm going to write that sucker down. So I got a couple of stocks. I already had LCID in my bullish watch list, but I'm going to add CVBF, and I'm going to add Ford as well to it because I think it's definitely worth following. I mean, CVBF had a rough day today, down 2%, but there's a lot of stocks that did far worse. Let's see here, man. SoFi. That's the stock I get so much hate for. That one, GameStop. What is it? AMC. One of the things that I mean, maybe I'm wrong on this, but I think that you're not going to see a bottom in this market until people give up on those stocks. I mean, it's just amazing that people keep pouring their paychecks into that crap. And I'm not talking about SoFi. I'm talking about like the Wall Street bet plays. So you got this declining trend line, and kind of by default, trading sideways long enough, it's broken out of it. I mean, this stock has gone from, beginning of 2021, it reached levels of 28. Now it's trading at 6, just below 6. So, I mean, it's been a pretty humbling experience for the stock, I'm sure. That would be no. So as you can see, I mean, some of these stocks that maybe I haven't drawn in the last few days or something like that, and I'm just trying to get a fresh take on them. At the very least, to get the remotely bullish on this stock, I would say that it needs to break out of this base. We've already established that it's broken out of this declining trend line, so let's forget about that for now. Then you have like almost what it looks to be a inverse head and shoulders pattern trying to form. You have a left shoulder, you have a head, and then you have a right shoulder. If you can break above that, like 647, 648, then you might have a little bit of an upside play. People think that because I've been down on SoFi over the last 4 or 5 months that I'll never be like bullish on it. That's not true. I just look at the charts for what it says. Now, overarching theme is that there is a double bottom that's trying to form. Call that one here real quick, but that's your first bottom and that's your second bottom. If we can break out at 647, 648 and run up to $8, I mean, that's substantial profit. That's like $1.50 on a 650 trade. I don't know what the math is on that, but just lost my pen too. Grab another pen. Got a bunch of these things. So that would be the parameters I would watch if I was to play it, my stop loss. And look, if you're going to trade SoFi, it's probably going to be a wide stop loss. So in this case, almost like 10%. Upside is that you want to get about 20% off of it. So a little more to do I really like having a 10% stop loss? Not really. Those are hard to play with. I need to get my face out of this thing too. There we go. Baba, has the trend changed? Let's pull it up and look at it, shall we? All right, that's my chicken scratch right there. The downtrend has kind of like evolved. You could say that, oh, maybe this was a downtrend at one point, and that's what we should be watching is that downtrend. But it's broken through all of them, so that's good. I mean, it's trading below this one right now. That's more or less because of the pullback. But that was the big downtrend that most people were watching. And it broke through it, man. I mean, it's definitely improved. Do I necessarily trust anything that's a Chinese stock right now? No. You just don't know if they're going to delist these things or they're going to do another shutdown, and there's talks about that right now. So do I want to be in any of the Chinese stocks? Not really. It's high risk, very high risk, particularly with the headline risk. You get into a Chinese stock, whether it's like Baba or Baidu, lots of headline risk. And you got to ask yourself, are you willing to put up with that? Are you willing to potentially lose a lot of money if there's a really negative headline that hits the wire overnight? That's very possible. So I definitely would be trading these things with an active stop loss at all times. There's no room for mental stop losses on this. So you got a base. So let's look at it from a technical standpoint, right? You got a base, nice base. It's formed, it's broken this declining trend line, and then it's struggled to sustain a move above the base. So right here, I would say a move above like 122 would be a huge positive development. That's about 10% from where it's currently trading at. So it needs a substantial move. I don't think necessarily it's gone bearish at this point. I mean, yeah, I mean, you could draw that trend line right there, right? This little rising trend line here off of May 25th lows. I mean, it's not, you wouldn't be wrong if you did. And if that's the case, it broke it. But I'm looking at it more from like just the overall developing base. Maybe it comes back down and then comes back up and you form your like right shoulder of this massive inverse head and shoulders pattern. And I know people will say, well, left shoulder kind of dupes down below the head. You're right. But I would maybe say that's probably more of an anomaly, that you're looking more for intent. Like, is there a base forming? And inverse head and shoulders patterns are good identifiers as a base that's forming in a stock. I think there is a base forming regardless of these 2 days right here. So it gets above this 200-day moving average because that looks like it's causing a little bit of heartache for the stock here in recent days. So like 122, I think that's the only way to get bullish on it if it can get above 122. BILI. Glad to see some of you guys all in here today, man. The market can be very discouraging. So every week I do these things. It's like, man, is anybody going to show up at the... I don't know if people have like lost all hope in this market. I don't think you should. I think as long as you're managing risk, you're planning out your trades, you know where your stop losses are, you're being patient and letting the trades develop, you know that you have a high probability of making it in this market. Don't force the trades. Let the trades come to you. Be a reluctant trader in this market is what I would probably say. Let's see here. I think I've been very reluctant as a trader so far this year, not because I don't enjoy trading. I love trading. That's why I do it. But just my experience with bear markets, I know that it's better to be slow to the draw than anything. It's like, don't look for the fight. Let the fight come to you. It's kind of like what you have to do in this market. Let the fight come to you. Don't go looking for a fight. Don't go looking for the trade. Let the trades come to you. BILI, BILI. This is one that I need to add to the watch list here. Pretty intriguing. A lot of resistance right here. It's hitting its head against this thing since February. February, it's been hitting its head against this resistance. So this is pretty clear cut. Break above the resistance, 28.65. That's what, 15+% away? I don't know the exact math, but it kind of looks like 15%. Consolidate some before it breaks out so you can keep that stop loss tight, and maybe there's an opportunity there. But again, a lot of these kinds of trades where there's lots of fluctuation in price from day to day, where the trading range is massive, it's hard to get into those trades with a tight stop loss. And so oftentimes I'm passing up on it. You know, I could find a good, let's say I found a very bullish setup in GME. Good chance I'm not going to take it just because of how much fluctuation in price there is in it. Stocks that are easier to get stop losses in is like Apple, Tesla. Tesla is still difficult, but it's easier than like this one, right? Amazon, you know, your large cap stocks are much more easier to get quality trade setups in versus your smaller cap stocks. But I love this chart though, and you never know. You could be shocked and find a pretty good setup come about out of BILI. I mean, it wasn't too long ago. I traded SPX once and made like 70-80% off of it. It was a huge win. I wouldn't necessarily call that a blue chip stock by any means. Swipe, welcome aboard. Glad to have you here. Let's see here. We got you there, Skyheart, already. So Nvidia. I've been getting a lot of questions about Nvidia lately. So one of the things that stands out to me with Nvidia, and you can see I was looking at some of my chicken scratch because I did a chart on StockTwits about it earlier. And I wanted to make sure I spotted that same pattern that I was talking about before. You got this like bearish wedge pattern that, or not bearish, bullish. Sometimes I confuse it because it's, you know, trending lower and it's below resistance. I want to sometimes call it a bearish wedge, but in fact, it's a bullish wedge. So this bullish wedge, you get some action tomorrow, maybe around like 158.50. There's a potential there. There's potential for a breakout on Nvidia. Now you got to be aware of the fact that you got like Texas Instruments. I think they're reporting this week, and you're going to have a number of other semiconductor stocks that could impact it, like AMD. I think they report next week or the week after. I don't know for sure, but earnings season's difficult because you got to weigh like stocks like Apple. What kind of effect might they have on a smaller software stock that uses that's a customer of Apple, for instance, right? So what some of these bigger name stocks can do in terms of impact to the overall market. And right now, things are kind of looking gloom out there in terms of companies like Apple beating. So I can't even do a refill on this because I'm out of this Four Roses. But man, it's it's an everyday sipper. I think you can drink it on the weekdays, weekends, whatever, but it's good. So cutting myself off, man. I don't have any more left in the bottle, and I can't get up and get some more. But bullish wedge, and I would watch for that breakout here of about 158. Did I skip it, EOG? You're right, I did. I just went straight to the next comment. My bad. So, Ethereum. Is that what we're talking about? Ethereum here? You got to pull up this chart right here. I haven't charted this one out for a while. Good grief. All sorts of crazy going on here. So with Ethereum, and I think you're seeing this with a lot of charts right now. Goodness, I need to shrink myself or something here. There we go. I'm up here. So we got this like declining channel here. Pretty interesting there, to say the least. But where I would be watching, and this has like a little bit of a bear flag pattern to it here, this little consolidation here over the, I don't know, since June 18th lows. You're just trading sideways. So you have it could be like a bearish flag. Man, it's so hard going from one platform to the next, but I'm trying. That's your bearish flag. Now, there's also a big level of support here that seems to be holding up, and it's very similar to the one that you're seeing with Bitcoin. Let's see if I can. There we go. You got some support right around this area here, and it's holding it. It's not like a perfectly clear-cut support level, but it does seem to be holding. So I'd be watching that, but probably more importantly, watch this bear flag pattern here that's setting up. So that would be the two things that I would watch right there. All right. Let's see, CRSP. This is one I've been seeing popping up on my scans a lot, and it's not a bad one. I think it's a very volatile one. But right now it's breaking out of an inverse head and shoulders pattern. So you can see this here as I zoom up to it. You got your left shoulder, you got your head, and you got this crazy convoluted right shoulder here that's very messy. But it's breaking out of it, so there's no denying that. Just fix it a little bit more so it's more representative of the peaks on this chart of late. There you go. So it's breaking out. I think stop loss has got to be below yesterday's lows. So stop loss at around like 72.23. If you're able to get in, the ideal entry point would have been probably yesterday, breaking out at around 77.81. It dipped below early on today, but then it rallied back pretty well. So should be up like $3 a share. I would follow this pattern just as long as it develops and doesn't try to break back below this neckline. That's going to be key on terms of a closing basis. But if it breaks intraday below this like 72.41, if it breaks below that, I don't want to be in it anymore. It's a very volatile stock. You're looking for about 20% upside just to justify a 10% stop loss. HNST. Let's see here, left shoulder, head, right shoulder breaking out. Very similar to CRSP. They're not related, but Very similar, nice base. This is a hard stock to trade simply because Honest Company. What is Honest Company again? I swear I've heard of this company before. I've never traded it because I don't really trade stocks under $10. But I know that we're Honest Company. I can't think of that one at all. But stop loss probably around like 305. It's breaking out at 341. So again, this is one that you're going to be looking for like 30% to justify it, like a 15% stop loss. Way outside of my risk tolerance range, but different strokes for different folks, I guess, where people have different styles and trading approaches. For some people it works, for me it doesn't. But again, one of the things I don't want to be is like some of the people on message boards or on Twitter, where it's like if you don't follow that person's trading philosophy or trading strategies, all of a sudden you're dead to them. I think everybody has a different approach to success in the market. One of the things that I always believe that transcends all trading philosophies is managing the risk. So HNST, it definitely has a breakout there. Left shoulder head, right shoulder, as I've already mentioned, and then it's breaking above all the moving averages. It looks very nice. So these stocks are high risk in this kind of a market though. So keep that in mind. Good stuff though. I'll add HNST just for kicks and giggles, though. Chris wants to know about the next bourbon again. It's an empty bottle here. I didn't drink this whole thing, though. I promise. It was pretty low to begin with, but good stuff though. Get it at like $25 at Sam's. Really solid. Yes, absolutely, Skyheart. Risk management is absolutely essential. See, Cheem's trading. Normally I swing trade shares, but ever since this bear market, I've been slowly transitioning to scalping options. I just get nervous keeping my money in this market for too long. That's understandable. Again, that has to go. You have to go back to like, what are you comfortable with in this market? For a lot of people, it may be not even trading it that much. Maybe just picking and choosing. For me, I went almost 3 weeks without a trade. It may have been 3 weeks. I don't know, but it felt like 3 years. I had to pick and choose because, like what we were talking about on the Qs earlier, being stuck in this sideways pattern, I had to wait for the right opportunity. But I get that. I get why. That's why it's also important to plan out your trades. Sometimes the night before, when the markets are closed, obviously futures are still open, but you can look at the charts without the noise of like things happening. You can start planning out trades there. That's where I do a lot of my work in terms of planning out my trades for the next day. And that gives you a little bit more of a clear thought process, especially if you're working 9 to 5. That's a great time. Once everybody goes to bed, maybe stay up a little bit later, go over the charts. Then we got DKNG. This is one of those stocks, and I've got a list of them, but DKNG is on the chart or on the list for stocks that I may want to invest in after all of this is said and done, like stocks that I want to put in my long-term portfolio, because I don't think sports betting is going anywhere. I think in terms of like fantasy betting, where I don't know if that's the right term, but I've played DraftKings before. I suck at it. But a lot of people feel like that they know football or basketball or baseball well enough to make bets on it. I don't think betting, the way that DraftKings does it, and especially with gambling probably being something that a lot of governments are going to start looking towards to raise revenue, is going anywhere soon. So I think that DraftKings could be one of those stocks long term that does really good. I just don't know if I really want it at $11 yet, because I don't know if the market has bottomed yet. So I want to wait for that, where I feel like, okay, we're coming out of the woods here, and I want to see whether or not we can bottom first in the general market, and then maybe start looking at stocks like DKNG, because it does seem like it's a good long-term value, just considering here in the United States, the fascination with sports and sports betting, and the potential for more states to be open to sports gambling. I think DKNG is in a perfect situation to benefit from that. So you got a declining resistance here, has yet to be able to break above it. And so again, I would probably say like 1320. That's a long ways away from current price. It's going to be a hard one to swing, because what are you looking at? Like 20% of a stop loss? That's a little too much for me, but that's the play probably in DKNG. Wait for this resistance to break. WBD and Bearish Bull just let me know that HNST sells diaper and beauty products. I just swear, I don't buy any beauty products. Definitely don't buy any diapers, man. I'm not at that point in life. but man, I just swear I've heard of the Honest Company somewhere before. I don't know. I didn't know if there was like a celebrity backing it or something like that, and that might be where I heard of it. WBD, Warner Brothers. Man, we're seeing these inverse head and shoulders patterns popping up. Before I even finish it, I'm going to go ahead and add this one to the list as well. I think DKNG I can also add to my bullish watch list just because I think that it's got some resistance there that if it breaks and the consolidation is right, it might be good for a swing trade. But I don't have high hopes that it'll become a swing trade, but you never know. WBD, left shoulder, head, right shoulder, 1481, probably be the breakout level for me if I was trading it. The problem is going to be is the stop loss. So you're looking at, close to a 10% stop loss on this one. So it needs to consolidate some just below this resistance level before I would get long on it. But it's a good chart, though. I mean, you're seeing these inverse head and shoulders patterns popping up with a lot of charts. I'm seeing a lot of double bottoms, just general basing patterns as well, like what we were talking about with LCID. So, guys, this was a good session, man. Really enjoyed doing these things with you guys. Again, I got 6 stocks that I can add to my watch lists for tomorrow. So you guys are benefiting me as much as I hope to be benefiting you guys. Like I said in the very beginning when I opened up, disappointing day for the bears. It was disappointing for me because I came into the day net short. I walked away with like 1.7% profit on my long position in QID. I thought we were going to get more out of it. Okay. But again, what I want, what I need, what I hope for, or what I expect, and I think sometimes the expectations is what gets us. What we expect is not necessarily what the market's going to give us. So we got to be willing to always adjust to what the market's doing. And I think if we do that, we'll be okay. So make sure to subscribe, to like this video here, subscribe to the channel, get notified. I think there's a little belly thing that'll send you notifications when I go live. I'm doing it once a week. I'm trying to put ideas together for how I can almost do these things every day, maybe before the market opens. I think that's probably a little bit further down the road, but it's definitely on my mind. And yeah, click join down below if you want to get some more of my stock market research each and every day. See you guys. Cheers to an empty bottle and glass, and God bless.